First one to the podium is Mr. Nicolopoulos. We had the privilege to meet in San Francisco, and he actually flew for the conference from California to here. He has more than 30 years of experience in project finance, and he's the founder and CEO of ADN Capital Ventures. Please, Mr. Nicolopoulos, the floor is yours. Looking forward to hearing from you.
Thanks for the kind invitation. It's a great pleasure being here with you. I'm going to be walking back and forth. I'd like to keep you awake and away from your iPhones texting. So I'm the founder and CEO of ADN Capital Ventures. It's a project advisory and project consultancy firm. I'm going to go through a few commercials, if you don't mind. It's a little bit of propaganda on my firm. I've been doing this for 25 years, 12 years with ADN Capital Ventures. We work consistently in the energy and infrastructure space. We've done about 400 megawatts of solar and wind. I've been doing wind since the 90s. I did wind at the time that the capex cost of a wind park was about 4 million per megawatt, and now it's down to 1. So this space has gone through a lot. Our current transaction portfolio is $2.5 billion. And important thing is I'm also the CFO of Synergos, which is a disruptive Silicon Valley startup firm, which I'll tell you a little more about it. I mean, that's some of the deals I've done around the world. A few words on Synergos. Is a new platform that brings together Silicon Valley high technology firm with capital providers and governments, the public sector, all with a view to accelerate the deployment of capital and have more projects funded, which seems to be the choking point in this space. All right, this is what you're here for, to hear about the wind space. I can tell you, this is one of the most exciting infrastructure and energy investment areas, out of all areas in infrastructure. In the 90s, as I said, the costs were up to 4.5 million per megawatt. About 25 years later, the costs have come down to less than $1 million per megawatt. On the other hand, the banks and the capital investors are feeling more and more comfortable with the risks in the space. So that has led to the deployment of a lot of capital. So the entire renewable market size is, I put there 350 billion, it's probably close to $1 trillion. I just want to be conservative because this is a written document. Europe in 2018 did about $26 billion on wind. This is a significant volume. You can compare and contrast with what we're seeing here in Greece, which is about 200 million per year, which is basically a drop in the bucket. The other important point is that the sector has opened up to the public space of investors, which are bond investors, green banks, pension funds. For example, the Swedish pension fund is making $1 billion of investment in the wind space and renewable space. So a lot of capital chasing this space. We've got about 800 investors. My firm and my colleagues were talking to about 100 of these investors, predominantly in Europe and in the US. The entire deal volume in 2018 throughout the world, it was about $240 billion. And most of the money were invested, guess where? China. It used to be Europe at the #1 place for investments. With #2 Europe and #3 the United States. Out of the renewable space, wind takes about 40%, solar takes about 20%. And this is very interesting right there, the bottom chart, which shows you that most of the investments in the energy space out of all sectors are predominantly in renewable space, and within the renewable space is the wind. So the wind space is the right place to make investments. So moving on to the market, 2018, this is Europe, right? 2018, it's about $65 billion market. Out of all this space, it's interesting, you see on the right-hand side, about less than half, 26 billion, is basically investments in new assets. These are the project financing transactions. The other interesting thing is the number 2 is where it's in project acquisitions. This is basically acquiring companies that have portfolio projects. So this means there is a lot of appetite to deploy capital in this space. Moving on to financing of new assets, in terms of megawatts, we're seeing about 12.5 gigs, total of 16 billion. We're talking about now project finance transactions. This is Europe, but let's see what's going on here in Europe. That's 16 billion of new assets. Let's look at the breakdown. About 50% of that was renewable wind space, 50% of that is offshore, 50% of that is onshore. So you can do the math. The interesting thing is, I want to zoom into Southeast Europe, which has been a follower, because most of the capital is going to Northern Europe, Nordic countries, particularly Sweden and UK. So Southeast Europe, which is basically, it's not Greece there, it's not Turkey, it's Spain and Italy. They've seen about 2.5 billion worth of new project financing transactions, about $1 billion, $1.5 billion each between Spain and Italy. And look what's going on to Greece, only 200 megawatts. So the big question is why? Why such a low investment in such a promising country with respect to wind? I promised I'm going to talk a little bit about debt and the equity. I want to show you how the margins are dropping over the last, let's say 5 to 7 years. The margins, the bank project finance debt was about 300 basis points, bips over the benchmark. Look where it is now, it's about half of that. And the reason for that is because more and more banks are feeling comfortable with the risks in that particular space. I singled out the Japanese banks because the Japanese banks are basically the primary lenders and project financiers, predominantly Bank of Tokyo, Mitsubishi, Mitsui Bank, and all. They have about 7% market share. There are about 65 banks, project finance banks that fund this space. And then we have the European banks, not many US banks, IRRs and project finance yields. Well, guess what? I couldn't find a lot of good data points, so apologies for that. It's all the way down to 2014, but I can speak about this, the yields. So here's the catch. Up to 3 years ago, the IRRs in the project were about 12 to 14%. A successful bidder would see the projects being allocated to him or to her at around that yield. Guess what? I spoke to about 10 investors and primary players. What they told me is that their target yields have dropped to 7 and 9%. Spain, it's about 7.5% yield. It's unbelievable, and the trend is downward. And that creates a very interesting paradigm because Greece is one of the most expensive countries when it comes to power. So this is an oxymoron, and yet it has the best aeolic potential. But just to give you a benchmark on what's going on. So everything is going down in this business, in this space. Construction cost, capex, bank yields, IRRs. So eventually that's going to percolate to lower costs for the consumer. I want to talk a little bit about, there is a huge cluster of investors. you can see anything. It's renewable funds, it's energy funds, it's infrastructure funds, it's pension funds, endowments, university endowment, like Harvard, Stanford endowment. You name it, everybody's there and is chasing yield and good yields. There is a little bit of an oxymoron and misrepresentation of funds. So, because people think that the fund will come and invest easily in this project, that's not the case. You have to talk about each fund has its own peculiarities and its own investment targets. And they look at, they're looking at regions in a fairly narrow view. I mean, these are the criteria that they're going through: risk appetite, strategy, geography, asset class, and lots of other considerations. So we've got a few developers, a few investors here. It's a game about how can you de-risk the project early on from the development stage, where you're getting a site, you're getting the interconnect agreement and all these things. And we've heard that this is a marathon, that somehow, if you're lucky, it can last for 7 years in Greece. So you cannot have deployment of capital with such long-term horizons. You've got to find a better way to deploy your capital and untie the processes that facilitate the project financing transaction. But if you do manage to stay in this area, you can make a lot of money. You can make a lot of money, but it's not going to be easy money. It's very hard-won money because you have to be an expert. So you can see at the development stage, the IRRs are about 50% to 100%. And as you de-risk the project, they drop to 20%. As you bring the transaction to construction completion, then you start looking at single digits. And then your exit is in operation, whereby you can get a pension fund, a sovereign wealth fund, to come in and buy out your portfolio because they're looking at quality cash flows, maybe at 7.5%. So anyway, I mean, I just put there some tips. This will all be available for you to read at your leisure or before you go to bed. I mean, the most important thing is you've got to have excellent professional resources in finance, technical, insurance, because it's an area with a lot of brain damage. You have to be detail-oriented. You've got to analyze just about all the risks involved. This is a highly structured the structured project finance transactions. And you've got to pick properly the partner, the financial and capital partner you're going to go to business with, because guess what? It's a marriage. And if you don't see things eye to eye, you're going to have a horrible divorce and litigation and other things. So you've got to be very selective with the people you want to team up with and you want to provide you the capital. On the other hand, instead of every project you go to a capital investor and say, look, I need $10 million or I need $5 million, you team up with a capital provider and they provide you the capital for development, for construction financing, and the rest. And maybe they stay there for 5 to 7 years. I've got to tell you, the infrastructure funds, beware of the infrastructure funds. Guess what? Because they have a shelf life of 5 to 7 years. They're not there for the long haul. Insurance companies, on the other hand, like the likes of Allianz and Zurich Re and all these players, they're there. The longer the better is for them. So anyway, I mean, you got some investors here. They can contradict me, which is fine. So opportunities in Greece, tremendous opportunities in Greece. You've heard press releases, etc., etc. I think Greece has the ability to generate about 1 to 1.5 gigawatt per year, so long as it gets its act together with respect to the licenses, permits, authorizations, and all the rest, which we've heard earlier today. There's been the auction system, which about 620 megawatts have been auctioned this year. And there is another auction coming up in November, so about 1 gig. But it doesn't mean that 1 gig is going to get financed this year. You're looking at about 1 to 2 years, because the banks, the capital providers, will have to raise about $1.5 billion. So how do you go from a country that sees funding of wind projects of $250 million to $1.5 billion, I do not know. But typically there's a transition, 1 to 2 year transition. So I think the industry outlook is highly attractive, it's very promising. We're in Greece because that's why I was excited to come and speak to you in this conference, because this is the right time. If you're going to make something, now it's the right time to deploy your resources and to basically step up your efforts and do imperacy. Because the space needs a lot of work, but it seems that we have an administration that is doing all the right moves to basically rectify the mistakes of the past. If there were mistakes, I mean, these were not mistakes basically, but to fine-tune the system so all the processes run smoothly. And the bottom line is you have to facilitate the deployment of capital. You cannot block the deployment of capital, because capital means investment, investment means development, prosperity, more jobs, and the rest. We're very excited to work with you, so thank you for your patience. I don't see any people looking at their iPhones, so that's a good measure. So thanks.